Good
Hi,
morning.
James.
Thank you very much
Morning.
for waiting. We're keen to hear more about Castelnau. I say Castelnau, you say Castelnau. I don't think there's a right way of doing this.
Yeah, you can call it. Yeah, use whatever you like.
Yeah, exactly. But we've got a presentation that you sent through, so I'm going to let you talk for a bit. Just tell us a bit about the fund, please.
Sure. Great. Well, if you go to the first slide, I guess if you cast now, just to explain, it was launched by Phoenix Asset Management, who are the investment manager in October 2021. It's based in Barnes, which is also where Phoenix is, and named after a road here, and it's a Guernsey incorporated investment company. If we go on to the next page, we've got quite a lean team. So if the way to think about it is there's Phoenix, who the investment manager, and I think Gary Shannon is pretty well known in the investment trust space as well as the investing space. And at Phoenix, they've got a track record of, I think, over 11% since 1998 annualized. So incredibly strong pedigree from Gary, and he was founder of Castleknow effectively, and him and his analyst and research team provide a huge amount of the knowledge and experience that's going into selecting companies. Then we've also got effectively a team at Castleknow that's focused on enhancing our investments. So if you look at the people I put on the page, we've got Andrew Geary, who was actually the CEO of Lush, who's a serial entrepreneur. Charlotte O'Shea, who spends a lot of time focusing on kind of their user experiences, the customers, innovation. Nathan, he knows a lot about development and technology. And the idea is, along with Mila Rain and Roddy, who have executive teams, we enhance and kind of augment the management teams to drive delivery in our portfolio. Just to explain relationship with Phoenix, as I said, to Phoenix are the investment manager, led by Gary. They're worth pointing out the performance fee here. So there are no management fees on the fund. There to ensure there's alignment. There's a performance fee payable if there's outperformance versus the all share, which is paid in fees, but there's no annual management fee. I think the other interesting thing, just in terms of structurally, is Sir Peter Wood. His investment vehicle is a cornerstone, and we'll come on to talking about partners. And we spend a lot of time nurturing partnerships, and they're quite beneficial to our portfolio companies. But Sir Peter, he was a founder of Direct Line and eShore, amongst other things. He still is one of the partners that we'll come on to, but is very involved in the business, and a useful person to have on a register. If we go to the next page, so look, we'll come on to what all the different companies are in the portfolio, but I thought it was useful to kind of set out what we're looking for holistically. So we're looking for companies that have a moat around them, economic or actually more general, or IP, something that means that they can't be disintermediated. We look for a material TAM, addressable market, so that we're not looking to make investments in businesses that can't be sizable. We have traditionally and continue to look for digitization opportunities, and by that we mean where the digital offering's probably been underinvested historically. And we've got a lot of skills and a lot of partners who can help improve those offerings. And I'll come on to how we've done that before. I think best in class, we normally look for market leaders or people that are differentiated in the market that they serve. We look for strong cultures and management teams that can lead that. We're not super keen on fundamentally changing management teams. We want to find places where there is a good ingrained culture, but we do look for strong value. Gary at Phoenix has always been someone that looks for the right time to invest. And the idea fundamentally is to create a flywheel effect with our investment. So we've got a portfolio at the moment. We'll add to those over time. We'll add the Phoenix experience, the skills we have at Castleknow. We'll utilize the partners we've got, like SP1, Iona Star, that we'll come to. We've got a significant network of people that can help, and the idea is to go from to create these companies into great companies which are cash generative. We look to invest effectively ever long. So we're not looking to have exit horizons in the portfolio. What we want to do is create a portfolio of great companies, get them to be cash generative, and if they don't have a use of capital at the return hurdles that we look for, invest that money into other companies and build the flywheel. If we go to the next slide, there's a lot of detail on here. I thought it was more useful if people look at it after than me reading it out. But you can see here the portfolio as we stand of the 9 companies. Very clearly the top 2 are 83% of GAV and 5% of GAV. Worth noting, Dignity have got listed bonds, Hornby are listed, and Silverwood's listed. So there are kind of some constraints about what we can say. The rest are private. So we do have a mix between the two, and we don't mind whether a business is listed or private. What you will also see though is that we look for a control stake. We most of the ownerships, apart from the Silverwood at the moment, we've got materially over 30%. We aren't passive. We are looking to help steer management teams and drive value there. If you think about what I said around what we're looking for in these businesses, I think each of them, so Dignity, which is the biggest funeral end of life services company that we'll come on to, Hornby, a leader in hobbies, Cambion, the market leader in wedding gift lists, that you'll be able to kind of tick off effectively the characteristics that I talked about before in each of them, whilst noting that they are from quite a diverse set of sectors. So there are some sectors we wouldn't look at, but we are broadly sector agnostic, as long as the characteristics that we look for are covered. If we go to the next slide, again, it's probably an oversimplification, this page, but this is an attempt to explain how we're trying to facilitate the companies becoming great, as we talked about in the flywheel. So we do have pretty strong views on how a company should operate. Conceptually and theoretically, and a lot of that comes from the Phoenix team's extensive reading and the Castelnau team's views on the world. So we codified that and put that into frameworks that help the companies that are in the portfolio understand kind of how we think about capital allocation, technology, culture, and I think that's quite helpful for us getting the learnings that we've got across the portfolio. We also strongly believe in best practice sharing. So we're trying to foster a culture across the group. So we have regular forums where we get all the CEOs and COs in a room, and that's not to dictate, actually, that's just to foster say, for example, on the CTO side of things, that is to get people to talk about the impact of AI, what they're finding in the market at the moment, and share best practice for the benefit of everybody in the group. We spent quite a lot of time strengthening our boards over the last 12 months in particular, so I'll come on to that in a bit more detail. But we've managed to attract some very senior and kind of experienced talent into the group, which we're pleased about. Capital allocation is a fundamental bedrock of what we do. We're looking to make high levels of returns, so embedding an understanding of capital allocation in all of the companies, and also being involved in those capital allocation decisions is something that is important to us. And going back to, as I said before, the kind of a technology and innovation side of things, so helping the businesses that, like I said, one of the investment thesis is digitalizing businesses that haven't got that limb to their business cases at the moment. We've got a lot of expertise both at Castelnau, but also in the other portfolio companies such as Cambion and Ocular, which we can help deploy to improve the wider portfolio. What I've done on the next few slides, if you go to 9, James, is I won't go through all of this in detail again, but I wanted to call out some of the strategic process we've had in the portfolios, but also, I guess, talk about what the future looks like, because that's kind of more interesting. I'll maybe spend a minute or two more on Dignity than the others, given it's the most material part of the portfolio. But so stabilization of the capital structure, we've got listed bonds. There's been quite a lot out there around what Dignity was intending to do or not do with them. But effectively, there was a trust, £100 million withdrawn from the trust in June that leaves Dignity in a scenario where we're very comfortable with the covenant position now. The capital structure is effectively stabilised, and that was one of the clouds that led to Dignity struggling in the public market. So that was a material piece of progress this year. Also, the hire of Zilla Bingthorne, that some of you might be aware of. She was CEO of Future Group, FTSE 100. She's also on the board of Trustpilot and M&C Saatchi. So really high quality CEO that joined in June and is already having a material effect. As well as her, we've hired Mike Seary from Time Out to be the CTO, somebody called Zach Sullivan to head funeral plans. So there is a lot of embedding of high quality people into the business, and that's a theme that you'll see running across the next couple of slides. So we've also spent quite a lot of time kind of rationalizing the funeral estate there. So there are some loss-making stores which have been tidied up. There is just a lot of kind of leasehold, freehold that we've tidied up there. So a lot of work, and going to the future, we think this is incredibly exciting. One of the reasons we took it private is the digitization of the business is a huge opportunity. Funeral plan penetration, if we get that right, can totally transform the economics of the business. Owning the whole journey, so engaging with potential customers earlier on, going into legal services, those kind of things are exciting and increasing memorialization. James, I'm conscious of the time you gave me, so I won't flip through all of the other portfolio companies. Happy to take questions on them. But a couple of things I would draw out of as a comment on maybe slide 10, 11, and 12 is that and 12 is there's been a huge embedding of people and senior people with senior experience. So I think that's really important. There's been a lot of tidying up of the companies over the last couple of years, and a fundamental focus on profitability or sales growth in the case of Ocular. So I think we've got leaner, more focused businesses with the right management teams in place, and we're excited about the future. If we go to slide 13, I think this just typifies some of the progress we've seen this year. So again, I won't go through everything on this slide, but if I call out some of the people hires, so Richard Thompson, that joined the board of Cambion, he was previously the CEO of RWS Group, so multi-billion-pound listed company. Ian Griffiths was the previous CFO of ITV. Zilla, we've already talked about. Neil Sachdev has also got a great CV. So we're getting these kind of heavyweights into the group. We've also done quite a lot of interesting strategic stuff. So Fraser's investment in Hornby during February. Fraser's actually co-invested in Iona Star with us, which is an AI startup. And the interesting thing about that, I guess, is just focusing on Iona Star, but I've talked about the importance of partnerships. So Fraser's, we consider one of our partners, somebody that we know well and we do business with. They're partnering with us in Iona Star. Iona Star is a great fund. It's investing in a really interesting space, and they've got a great track record in themselves. So we hope to make an economic return from that. On top of that, the technology and the learnings that are in that business, the portfolio companies that they're going to invest in, are going to be things that we can deploy across the rest of the group. That's something that we've done with Ocular. So one of our investments, that is a company that both has delivered economically, we're very excited about, but also is helping the rest of the group. So that you can see this theme of kind of cross-pollination and technology. On slide 14, I suppose we've got to talk about performance. Listening to James and Andrew, you talking before about how viewers of this show probably think about. Look, we're very honest about performance. So from launch to middle of 2023, performance came off, NAV reduced. there was a ton of hard work going on behind the scenes, and I think a lot of the work that has been going on has started to be realised, and there's more tangible outputs of that. The big jump over the summer was to do with effectively the capital structure being resolved at Dignity, and it was if you want to look at our quarterly, there's more explanation around that how that happens, but there was effectively a revaluation of Dignity due to the fact that we'd released that excess surplus cash. And look, we're back to broadly where we started. I think that is not where we want to be, and I think the bedrock of where we think we can get to now being laid, and actually a lot of the heavy lifting has been done. Now we're into execution mode of getting the future delivered in the portfolio companies that we've got and looking for new opportunities. So slide 15, I guess the reasons to be optimistic is the bench of talent that we've talked about at Castelnau, and we've entered into the wider group. The progress being made connecting the companies as well, so the interconnectivity has worked well. The Dignity transformation, I've talked about the hires, really pleased about Zillow, really pleased about capital structure. We've got a focus on digitalization. There are a couple of bolt-on pieces of M&A we might be looking at to progress the strategy, but all of those things we really feel are going in the right direction. And I also think, to talk about partners again, the evidence, so not just talking, but we've got this partnership network, the fact that we're co-investing, the fact that we're finding these businesses and driving results is exciting. So it's reasons to be optimistic of a tangible delivery of a lot of things that for a couple of years we were talking about. So with that, I hope that wasn't too long, James. I'll hand back to you.
No, great. Thank you very much. Yeah, definitely covered a lot of ground there. There's a question here actually, which has occurred to me before. Obviously, the way that your fees work, I think you explained this earlier on. You're not taking a base fee, but you are taking a performance fee.
Yep.
So starting October 21. So you haven't earned any money off this yet. Is that still?
It's correct. Yeah, and we've still got a bit of a way to go to get it. So again, we're optimistic that we'll get there, and we're working hard to do it. But yeah, we're philosophically we wanted to make ourselves incredibly aligned to investors, and we are.
Fair enough. Cool. Then within the structure of the companies that you've got here, how do you use debt? Is it sort of on a company by company basis, or?
So a lot of there's quite different scales of business here. So Dignity is a highly profitable business, has its own debt at actually a very cheap coupon rate. Some of the other businesses are effectively very early stage, so we would provide the loan, any loans that they require to them at an appropriate interest rate. So we are fundamentally, we don't intend to leverage our companies. It's not part of our investment thesis. We're not a private equity house. We'll use it where it's rational to do so, but it's not part of the way that we generate returns.
Is there much cash in the portfolio?
In terms of at Castelnau level or in the so we run it quite tight is the reality. So we don't look to hold cash back at Castelnau level. We have it fully deployed, and when we've got cash needs, we effectively raise that cash either by issuing some equity, which we've done this year. We've had some additional loans coming in. Like I said, I think we're at a transition period. So Dignity is the largest portfolio company. We're hoping that becomes cash generative next year to us at Castelnau level, and that can start the flywheel effect. And again, Hornby's there is a lot of work going on at Hornby, and that business is transitioning very quickly. But again, it's a pretty mature business in terms of generates a lot of sales and should be generating cash. The other end of the extreme, Ocular and again, we haven't lent debt to that, and we've just done a successful fundraising with Protura, raising 3.25 million over the summer. But that is that's effectively a tech startup business that's valued on ARRs and will never have debt in it for a long period of time. So it's really depends on which company in the portfolio we're looking at.
Cool. I mean, one of the things that's commendable is how well the discount is sort of kept in, really. I mean, there've been periods when you've been at big premiums, but you're still quite close to NAV. Is
Yeah.
that loyal shareholder base? Is that the reason for that?
So I think, I think one of the things I'd say our shareholders are very loyal. We don't see, I think a lot the investors that we've had, a lot of them have been investors for a lot of the journey. I think we spend quite a lot of time with our investors explaining what's going on. So we don't see we have a genuine IR program in terms of keeping people up to date with with progress. We update the market. We do quarterly reports where we're kind of warts and all. So we do explain what's going on. I think people appreciate our honest approach. I think we take the valuation very seriously as well. So, we I think our investors have comfort that but we're not, we're representing things in an appropriate way. And, we do put downs to valuations in regularly as well as up. So I think there's comfort that our the NAV is appropriate. And I think fundamentally, if we're on dignity is a lot of the value in fundamentally because of the size of it in the portfolio. And I think the story is just incredibly compelling there. I didn't want to do the whole presentation on dignity because this is an introduction, but the size of the opportunity in every element of that business, from the capital structure, sorting out the people, the digitalization, changing the whole industry. So funeral plan penetration in the UK is about 6 to 7%. In France, it's triple that. In the Netherlands, it's about 60%. If we got anywhere near the levels of penetration at funeral plans, so I should explain, funeral plans are effectively where you pay a customer pays an amount of money up front, or they can pay in installments, but it means that they've locked in the price of the funeral in the future, and where they die, that funeral it's effectively paid for. We don't have to worry about people doing it. That if that penetration that would be transformative to the business. And so there are a lot of levers to pull with technology. As I say, it's totally public, but Dignity was technologically quite behind. That digital transformation is taking place, and it can change a sector that is, I think, end of life sector has traditionally been seen as quite not a modern area of the world. If we modernize it, the opportunity is huge. So to go back to your question, I think a lot of the people that do the work on Castelnau, and particularly Dignities, come to realize the inherent opportunity here. And we're continuing to try and make sure that people do the work and we take them with us.
Great, thank you. In terms of the shape of the portfolio, so you've got 9 companies in there now. Is that enough, or is that too many, or is that about right? What's the?
So I think we're, as I said at the start about the flywheel, I think the reality is we're long-term holders. So you can never say never, but the business model is that we will continue to add effectively. So if a business gets to a position where it's not fundamentally growing anymore, but it's effectively generating cash, and it's not able to reinvest that cash at a level that would generate the returns that we're looking for, we would use that cash, take the cash back to Castelnau and look for investments that do generate that return. So I think the number of investments we have at the moment is manageable for us. We're never going to have a huge list because of the level of impact that we want to help building these companies through. But in a perfect world, we'd look to add selectively over time as the portfolio of companies that we've got mature and kick off cash.
That makes sense. What would be the trigger to sell something?
So in the model that we want to create is that we are evergreen investors, and I think that's fundamental to our proposition, because I think it's also important for attracting companies to join. So I think it would be a challenge company that where we didn't think we could help, and it's probably in best developed in somebody else's hands. But it's not. I'm always one for not ruling anything out, but it's not something that's on the cards at the moment. It's not something we'd want to see. I just think it's naive to say you're never going to do something, but it's absolutely long-term capital that we're intending, and that's because also that's the kind of investment decisions we want people to make in the companies as well. We want people to be thinking about investing in what the company could be in 3 to 5 years, not making short-term decisions for the benefit of a value over a couple of months to the detriment of value over 5 to 10 years, because that's how we look at value.
Okay, thank you. Um, just one thing on phrases. I mean, is that just a source of capital?
No, not at all. I, if I think from a relationship perspective, we're great admirers of Fraser's, what they've achieved, the way that they think about their investments, but also capital allocation, returns on capital, the way they think about the customer. So we see them as a great company, and that is part of the reason that we've got the strategic investment. One of the things that I think Mike in a Hornby announcement talked about was he's doing a free consultancy with them to talk to them about he committed to talking about the warehousing and the stuff that Frasers are brilliant at. That relationship can benefit Hornby and others in the portfolio. Iona Star is another good example. Fraser's got a ton of data. Iona Star's an AI company, and can see there are natural synergies of that. But no, we're admirers of that business, as well as it being a source of capital to co-investments.
Actually, can you say a little bit more about the Iona Star? So, what's the ambition with that?
What's the
Ambition with the Iona Star?
Yeah, so it's effectively a fund that we've put 10 up to 10 million of funding for the life of the fund in. Frasers have also put 10 million in, and management have contributed some money. So the first close was a week or so ago. So they're talking to other investors now and looking to raise up to 40. And effectively they are investing in startup data analytics, AI-enabled businesses, globally. The team there are experts in what they do. Jerry, Kevin, Graham, Mike, etc. And they've been doing it for a long time. Highly experienced team. And I think we just see that there's a huge opportunity if you do the work. So their diligence process is they're not. It's not a fad investment. These are people that have been in that area for a long time, looking at a whole host of opportunities and being incredibly selective about it. Equally, where you find a good asset, there could be potentially a lot of value there. One, and like I say, their track record is fantastic from their first fund. And then two, there is a benefit to those companies to the wider group. So, an example of it is the Ocular Boost product. So Ocular isn't an Iona Star, it's a separate company, but they effectively help businesses using AI algorithms to improve their websites and improve their sales. That's actually been effective. Their product has been effective across our portfolio company. So there's the Ocular, which is a great investment anyway, but then there's the tangential benefits to the rest of their portfolio. And I think Iona Stars can be another great test case of that.
Great, thank you very much. We've covered a lot of ground. It all sounds very interesting. We'll follow with interest, and we'll get you back on again and find out how it's going. But good luck with it all.
Great, thanks, James.
And we'll be back next week talking to James Armstrong from Bluefield Solar. So we've got a full lineup all the way through to Christmas, as I said before. And it may change from time to time. I think it was supposed to be European opportunities, but they've had to delay it till January, unfortunately, but you will get to see them. But nevertheless, we've got James on next week, and be good to talk to him then. So thanks for your time this morning, and have a good weekend, and we'll see you next week.